What's going on, y'all? This is Jerry, one of your co-hosts for the Crypto Connection podcast show. I got Mr. Marcus Rozier, a special guest from episode 5, and it looked like he was coming a permanent resident now. Winston is not available today, but he did send us a short video of something he wants to talk about on the show. This is a brief update. It's not a regular full session show that we're going to be doing today, but just a little, give you a mid-market update what's going on in between our next show. So, welcome to. How you doing, Marcus?
I'm doing good. Appreciate you having me back, and yeah, I'm blessed to be back. Still around.
All right, yeah. Thank you for coming on. Market has been crypto market has been down today. I don't know if you all are paying attention to it. Look like everything is down a little bit, but it's expected to happen since the inflation increase, and then all the mortgage prices. All markets are affected by each other, so. If one massive market is going down, you can see that trending down to the other markets. And you can see that in the crypto right now. We got, let me see if I can share my screen. Hold on one second. Share my screen. There we go. As you can see, right here, I'm on Cointelegraph website. As you can see, Bitcoin's down almost 4%. Ethereum's down 6%. BNB is down 5.5. Solana is down 11%. XRP is down almost 6%, and Dogecoin is down 8.2%. But Dogecoin has a recent increase. I guess because of Elon Musk and his Twitter handle going crazy as usual, since he has a 9% stake in Twitter company now. So Dogecoin has went up a little bit.
Mark won the board.
Right. Oh, yeah, that's right. He got on the board.
Yeah, I was about to say the speculation. There was like, oh, he just owned it, but no, that dude joined the board, making changes now.
Yeah. So
this is related to free speech, keeping up the First Amendment on Twitter. So that's gonna be interesting.
Exactly. Then Twitter stock went crazy earlier this week since that announcement that Elon Musk has joined their community. So that is crazy. It's gonna be interesting what he's gonna do with that. Yeah. So let me start by getting into Winston's video that he sent us. This is about an 8-minute video of some interesting stuff. I haven't watched the whole thing, but it started off very, very interesting. So let me go ahead and share that. Give me 1 second. Let me pull it up for y'all. Hold on. Give me 1 second. I thought I had it up here. Hold on 1 second. I must have clicked off on it. Hold on 1 second, y'all. Bear with me in my old age. I recently just had my 41st birthday. So I guess there we go. Video showing up now. Here we go.
All right, y'all. This is Winston Buckley with Metarize. So I can't be with you guys live, but I just wanted to leave just a few things to share, something to think about. Crypto, whether you like it or not, whether you know it or not. And one way that's going to happen is with negative interest rates. So there's been a lot of talk recently about interest rates going up, what the Fed is going to do, interest rate hikes over the next year or so. But people don't really talk about negative interest rates, and they actually do exist. So I got an article here from the International Monetary Fund. This is something that they've been discussing for years. You can see that this article is from March of 2020, and it talks about interest rates. Now, if you know anything about governments around the world, and especially large multinational governmental agencies, they don't just put information out, or they don't do research for no reason. So how can negative interest rates be implemented, and for what effect? So another article that they have is just talking about why interest rates in a negative sense can be useful. And his quote here says that the evidence so far indicates negative interest rate policies have succeeded in easing financial conditions without raising significant financial stability concerns. So there are cases where negative interest rates can actually stimulate the economy. We've seen it here in America. We've seen how having a low interest rate stimulates housing. People can buy more. people can borrow more, and that's even with interest rates on cars. I remember when interest rates on cars were closer to 10%, and that was good. And then that just dropped down over time since the last financial crash. And you started to see 3%, 2%, even 1%, and some companies will offer 0% interest for a certain period of time. So it does work. People do buy more and they spend more when there's this perception of a rate being lower, because the banks can obviously borrow more money and therefore they can lend out more money, which would qualify for a loan on a mortgage would be more if there's lower interest rates as opposed to higher interest rates. So for every interest rate increase, let's say it's a percentage, couple of percentage points, every time that goes up, the amount of house that you can buy goes down. So a lot of people are just keeping an eye on what the Fed is doing. Now we're gonna tie this all into crypto. That's all this stuff always ties in. You know, I like to talk about the macroeconomics, but there already are either zero interest rates or negative interest rates in different parts of the world. So you can see in the UK, in Sweden, it's close to zero, but in Japan, they've had a negative 0.1% interest rate. Certain parts of the Eurozone, negative 0.5% interest. Denmark, negative 0.6. Switzerland, negative 0.75. Now, it's kind of weird, you know, how can this work? How can they drive an interest rate below zero? But the reason they do this, if you look up Japanese real estate and just how it exploded, I mean, there's just places in Japan that only the uber rich can afford, because the interest rate is so low that they can just, I mean, they can just live whatever they want. And they actually pay you in a sense for borrowing. So let's say you borrow $100,000, the bank is actually incentivizing you to borrow. So you're on a negative interest rate, you're getting basically a discount on that home. And so as the price appreciates on that home, and you have this negative interest, I mean, it can just send housing just out of this world. And we've seen that here in the States, just what has happened to housing over the last few years. So that's why negative interest rates are used. Now, flipping over to the crypto side of things, negative interest rates, in my opinion, are going to be used to implement central bank digital currencies. So in the US here, a lot of people are going to be using crypto in the next 5 or 10 years, because we're going to have a central bank digital currency. So how would that work? So just like now, like the last example that we used last week, the banks are paying 0.75% interest, they're paying 0.5% interest on the savings account. Now imagine if the bank told you, we're going to pay you negative 1% interest on your account. So what does that mean for you? You put $100 in the bank is going to tax you 1%. So you have $100 at the beginning of the year on January 1, you have $100. Next year come January 1, you're going to have $99. Let's say that negative interest rate is 2% or 3%. So for every dollar that you have in the bank, that next year you're going to have 2% less or 3% less. So if a banks or the central banks want to move their people onto a central bank digital currency, that's the way to do it. So they'll say, okay, you can still use the bank. You're familiar with the bank is trusted. However, if you leave your money just in US dollars, just in fiat currency, you're going to have a 3% fee on that. Or you can use the central bank digital coin and you can get 1% interest on a central bank digital coin. For most people, they're going to ask, well, what's the difference? And they're going to say, well, this is just a representation, a digital representation of the dollar. And people are going to say, well, is it FDIC insured? Yes, FDIC insured. You're going to spend it just like you spend your dollars on your day. You won't even know. And most people are going to say, yeah, put my money in the account, in this CBDC account. I don't want to have it in a regular high yield savings account. If you're going to charge me a high yield savings rate of negative 3%, give me the 1% on the CBDC. And if you've never heard of it, it's already here. This is a website called cbdctracker.org, and it can show you where there has been either research, proof of concept, pilots, or already launched. So research, this green category is here in the States, right where we are. So research here, South America, all throughout Europe, several parts in Africa, but they've launched in several places as well. So several countries in Africa, this is a little outdated, actually, but Nigeria has already launched their digital currency, their CBDC, one of the first in all of the world. And not surprising that things are done first in Africa. That's no surprise. But a lot of places are already testing out their CBDCs all throughout the world, different places. Some places have the pilots already. It's here. It's coming. Please, my call to action for you all is to just do a little bit of digging. I looked this up in about 10 minutes time. Just do a little bit of digging about what's coming. Figure out how are you going to either position yourself or partner with people. You have Jared here, you have Mr. Rosa here, you have me here. Ask somebody if you don't know what's going on. Just get a little bit of information, figure out what you need to do, position yourself, get prepared. The future is already here. Thank y'all. Appreciate y'all. Talk to you later.
Man, another great video by Winston. He's lucky he wasn't live because I had a lot of questions. I'm gonna get him to answer on the next time we come on live. So Mr. Marcus, what do you think about the video we just saw? You on mute? You on mute?
My bad, I wasn't. All right. No. I wish. I do wish he was on because I like to talk about negative inflation. There was a time in America where he was right, like about around this time last year, people were really thinking that it was about to happen. So yeah, it would have been interesting seeing that happen in America. And luckily, our Fed, kept doing what it was doing. But yeah, I was actually kind of looking forward to it because I wanted to see if people were going to pull the money out the banks or if people were going to borrow more. But with the rates being so low and they kept being so low, we didn't have to go negative because there was enough money people saved up. People kept buying homes and stuff. Again, we're talking about a year and a half ago, 2 years. Now we see the results of all that. But gas prices, everything. But maybe we should have went negative. Now we look at how we are living right now and the prices we're paying. Honestly, I think the negative might have been the best route. I think long term now, honestly. But,
okay, yeah. Cool. Yeah, what's interesting on that website he showed us that Africa launched first for the digital currency, and that's the first time I even hear about it. I never knew that.
That's because of the fraud. So yeah, it definitely did. But dang, do you know how many fraud cases, crypto issues? So the thing about Africa also, since the country itself isn't unified, the thing about crypto in Africa is they're trying to get it under one unified
currency.
Government control, like because technically between the revolutions, the fighting, the different parties, there is no unification. So a lot of people in Africa are seeing crypto, they're getting taken advantage of because you really can't have a currency in Africa until you have the nation itself somewhat more unified. Yeah, it's gonna be real difficult. They find it pretty hard out there. So yeah, a lot of people do a lot of crypto scams out there and taking advantage of a lot of communities. Yeah. So yeah, it might have been the first, but it also was the first for the worst schemes of crypto.
Right. I'm glad you brought that up. Can you talk about that the last fraud that happened like recently? Because I remember some coin recently. I think we talked about this in the last episode, but I'm not sure. I mean, I talked earlier in another episode. But recently that coin came out and then it blew up. It might have been that coin for Squid Games, but I think they had another token after that. Didn't they have a token after the Squid Game?
I do remember the Squid Games rug pull, which I felt like that was common sense. I don't know why anybody jumped into that.
Well, you understand people don't understand. People think they get into crypto, they think it's back like buying a stock or something.
But I mean, it was clearly what do you call it? Where people clout chasing. It was clearly clout chasing. It was a definition of clout chasing. It wasn't even made by the Squid. Like, there was no, like, it's like no one didn't even do the basic due diligence, being like, are they even associated? And let me go to the website. Is there any type of connection between Squid Games and Netflix and the production company behind Squid Games, or even the country itself? No. So why did y'all think just because have the name, anybody can put the name on anything? So that's my issue with that, was honestly like people just didn't do their basic, literally Google due diligence. So I'm not gonna lie, that's on them. Honestly, I really didn't feel any. I was like, really, guys, come on.
Cool. All right, I'm glad you said that. So, because you and Winston have more experience in the space than I do. So, if somebody don't have no experience in the space at all, like they novice, they don't know nothing about crypto, what are the basic things they should do to research when they want to invest or try to trade a cryptocurrency? Give them like top 5 basic things.
Number 1 through 5, I would say. I mean, I just said what I personally do, right? So I look at the team. I see the team is docs. Do they have video? Do they have pictures? Do they have a history? Do they have a resume? Do they have a LinkedIn? Any professional articles written about them, about what they've accomplished anywhere online, things like that. From that point on, from the team, I always check out tokenomics. I know that might be a little advanced for people. Tokenomics is basically how the project's going to be either using the currency. They might have treasury, distribute, reward pools, things of that nature. After that, roadmap. We look at current roadmap, what their plan is, the previous steps. So like, did they stay on schedule? Are they behind schedule? Are they ahead of schedule? And then just also what I realized growing into it and going into longer is people under delivering versus over delivering. I respect projects who are very simple roadmaps, but over deliver because it really helps you out with your hype. After roadmaps, really is just the social media sphere. You know, are they on Instagram? Are they on Twitter? Are they on Facebook? Are they on YouTube? Do they have a Discord following? How big is it? How active they are? How they communicate to the community? Stuff like that. That's really what you really need to focus on.
Okay, that's understandable right there. Because a lot of people ask me what tokens they should get invested into, crypto or NFTs and stuff like that. But I tell them, look, just stick to the top, like top 5, top 10. You know, they've been there, stable coins or NFT technology, just stick with the top. You should be fine. Another thing I want to talk about is I've been seeing this thing about, because I'm heavy in SHIB. I've been seeing this thing called SHIB burning. And I see that a lot of whales or institutional back companies are starting to buy SHIB up at the moment. So what are your thoughts about people burning SHIB to make it more scarcity? Because, you know, the more scarce it is, the more valuable it is.
From my understanding, again, about 2 years in space, burn mechanics are nothing new. A lot of people do it to fight against inflation. Like that's what they're doing. They're trying to increase the scarcity of the token by increasing its value by burning it to reduce the total supply. Burning's cool. I still think it's temporary unless you have enough burning mechanics at the end of the day. I mean, burning's like taxes, right? Let's be real. It's like what we pay in taxes. So it does work, and I think it's a fine role, and I think it is required. I think every future project is going to have some type of burning. I've done a number of projects that have burnings. I know some people don't like the fact because it is kind of like burning money. Specifically, I give my experience on. I did a burning project on NFT. You know, it was I think an 8-month project. You buy a couple pieces at different times throughout every 3 months. If you hold those pieces, of course, the value went up. But after you burn those 2 pieces, when you turn them in, you burn them, you would get a special additional piece. Now, from an investor's point of view, I bought one piece at 200. I bought another piece at 174. At the time of the burn event, both pieces I burned went to a value of $300. So when I did burn both those pieces, you would think you can get the equated value of both of those. I did on top of the value that I burned, so the rarity went up. So I made like $1,000 profit from burning 2 pieces. So I do think burning works. I play a number of pay-to-earn video games. The burning, it really does help bring in that stability long term, man. I think it's useful. I don't see nothing wrong with it, but people need to burn. And that's the thing. I do want to admit, I think it's only going to help the holders, though, because if you don't have a lot, I mean, you can't burn, right? Technically, you're not going to burn.
So let me ask this. How do you burn a particular token? Like, how do you do it?
Everybody's usually different. Honestly, people just have an address you just send it to and it burns it. It's literally like just a dummy address. It just destroys it.
Oh, okay. I got you.
It's literally burning money. Like that's what it literally is. It literally that's what it is. It's literally if you burn an NFT, it's literally just like, oh, so you have a million supply of whatever token, and you burn half of it. It's gone forever.
So you just go to like an IP address. It's pretty much just like a virtual.
It'll be a public key. They're probably sending it to.
Okay. And you just put it in there, it burns it, and it's gone forever.
That's it. It's gone forever. Taking it all removed from the blockchain. Yeah, fully destroyed.
Okay. All right.
So burning is cool. I do like it because if you're a holder and you've been there from the beginning, you're like, oh yeah, burning. Your price is going up, you know.
Right. Yeah, because like I found this website. Hold on, let me share my screen again. Share my screen.
Yeah, I was about to say, I didn't know Shiba was going to burn, but I mean, hey, they're trying to stay valid. That's interesting. I'm about to look at the price.
Like I saw this, like that people just burning, like they burning, like it's crazy. Like they're burning sheep tokens in them. Look at that. I think that what is that? What I don't even know. What is that number? 410 trillion? Is that trillion?
Got the burning. Okay, so it's a price actually, but I mean, I wonder if did it do any correlation to the? Oh yeah, as I said, I was what's the Shiba price at? But the market cap, of course, market cap went down because they're burning the total volume and Shiba price is down 8%. I mean, I don't see the point. I'm not gonna lie to you. To tell you the truth, as far as Shiba's concerned, I would never touch it.
You would never touch it. Why? You know, Winston says the same thing. He would never touch it.
I feel bad for anybody who's got money issue because this is so we'll go back to my 5 fundamentals. You know, you told me to give you those quick 5 fundamentals. Yeah. I was trying to just be nice for the very basic consumer. But like Shiba, let's go like a little more advanced, right? For the people who made it this far in the video, you're 21 minutes in. Thank you for watching. We appreciate it. So for y'all who stayed in 21 minutes, I think YouTube's like what 7 to 15 minutes and people are out. So yeah, let's be real. Like for y'all who stayed 21 minutes, let me give you some alpha. So on some real stuff, man. And alpha for crypto talk is like that nuggets of information, though, those good tips, things that a lot of people. It's true. Like if you look at like alpha in crypto, like, that's what people say. I'm gonna give you some alpha. So I'm about Mr. Ross will probably drop some alpha for y'all guys. So, man, these projects. I want everybody to know. First of all, never buy a token pushed by any influencer. I don't care if it's your freaking makeup model, your favorite rapper. I don't care if it's your favorite basketball, football athlete. Do not, I repeat, do not follow your influencers. Secondly, I would state that, man, do not buy a meme coin. It does nothing. It has no real impact, no real value, no tangible anything. Honestly, most investors long term, I know Jared Sullivan stay in the top 5. That is the safest way to go. But if you want to make your money long term, you have to treat this like the .com bubble back in what was it? Late 90s? I know I wasn't born. I missed it. But I did. I just turned 30. I missed the .com bubble. But I treat crypto like the .com bubble, man. Honestly, because the .com bubble was the closest example to the technology advancement in the world, right? It went from Web 1, which was your plain DOS, to Web 2, which was your GUI interfaces, which we got Instagram, Facebook, and now we're going to Web 3. We just, like I said, we've always stated this. We just don't want our people left behind anymore, and there's no excuse to. So, no, we need to. Yeah, we got to get this stuff together. So, for your third one, I would state, man, make sure the company makes something. And I know people don't know what that means. I mean, I got to explain a little deeper, but it takes some time. I know people have kids, they have their lives, they have girlfriends, but I'm not gonna lie to you, man. You have to do the research. It does take time. You're gonna put a couple hours in, looking up the actual bare bones of a company, looking up the board members, looking up the founding members, reading what they've accomplished previously to them establishing that company. Because honestly, that's the only way. And it's the third thing is looking at I forgot the specific form, but basically looking at the company's finances, man. Every 3 to 6 months to release them. Does that business make money? Are they in the net positive? If there's not the net positive, you see they have a good 5 to 10 year long-term plan, there you go. That's a crypto company to invest in. You guys want some examples to look up companies? I stress this more than enough, man. Chainlink, backend. I know most people says Chainlink. Chainlink's great. The next one I would say is Polygon's really good long-term hold. Layer 2, really gonna help with Ethereum. I know that merge is happening. Good Polygon's still gonna be a good play. I think those two, for example, of what to look up and see a good company that actually does things. I want to check out those two. And Singularity Net, man. Why not? If you guys are into like robotics, just to get your brain out there, those three are really good just to learn how to research, look up a good company, a good team, a good product. They're making money. And they're helping progress in Web3. I think that's what you need to look for.
Okay,
that's it, man.
Where should people go besides, like I gave one website earlier, Cointelegraph. Where should one go to learn like basic breakdown what blockchain is, NFTs, stuff like that? Just tell them what you look at.
Yeah, I was gonna say honestly, I didn't really just that's hard to find. I think a lot of people right now are trying to make courses to charge people for that kind of stuff now because people are trying to monetize it, and that's what I'm finding myself. So what I had to do was jump in with my own money. Honestly, I am a doer. I'm a learner by doer. I know some people aren't, but I'm a learner by doer. So I put my money where my mouth is. I learned I'm going into my early 20s, late 20s. I need to stop, just practicing what I preach. And so I tell anybody, regardless of any investment, if I don't learn a product, use a product, see the product being used by other people, I'm not going to invest in it, honestly. So that's how I treated crypto NFTs. I bought the crypto, I bought NFTs, I jumped into communities, and I honestly just asked a bunch of questions because I didn't know a lot of stuff. I really didn't. I was out there trying to figure it out like everybody else. I learned all these rules the hard way by jumping into myself, rug pulls, getting scammed, projects I wasted $500 that didn't turn up to anything. Like this is real. But I've learned to avoid those by the lessons I did learn, and look to look out for, looking at contracts getting audited and stuff like that. I mean, there's a few more details, but what I really did was You said what?
What kind of contract you talking about? Smart contract?
The smart contracts. Yeah. So people don't know this. A lot of people don't know this, but every smart contract, if you're a project, gets audited. And there's certain auditors that are out there that are pretty legitimate. Other ones people can kind of just pay for. Tech is pretty much the prime auditor right now in Web3 for smart contracts. So I do trust them. But you definitely should always make sure your contract you're working on or trying to invest any money in has a contract that's been audited and fully audited. And I don't invest in contracts just because they're audited doesn't mean it doesn't have any vulnerabilities. Just as we know for IT professionals, there's levels to it. There's low, medium, and high. Don't invest in any contract that has high vulnerabilities until those vulnerabilities get rectified. And honestly, I don't invest in companies that have medium and the low vulnerabilities. I'm very specific as a guy who knows tech. It does depend on the vulnerability. They're very descriptive. You can click on it, read it, but if you don't understand tech, it might be a little over your head. But for your tech people out there, you'll know. So you know if it's serious. And that might be like a host name, an SSO cert. Like some of those stuff are kind of basic, so it's not a big issue. But some stuff are like injection vulnerability protection is missing. Like what? What you mean? So that means somebody could just go into your contract and change what they want? No, that's crazy. You know what I mean? So stuff like that you want to look out for.
So how do you know if how would you know if a contract is audited? Like they say.
So if you go to the main website, they usually push it on there. They have like a badge and be like, like CompTIA kind of thing. Oh, we've been audited by FinTech. Click this link to look at the details, kind of thing. And most of the top 3 have that. If you don't see it on the top page or scrolling all the way down to the bottom or something like that, it's probably not audited. Most things you try and ask, but most people have it on their webpage and publicly put it out there. At this point, it's kind of becoming a standard, man. You need to have a docs team. You need to have a complete audit. You need to have a open, transparent, readable white paper with transparent, understandable tokenomics.
Okay.
And roadmaps, depending on what you're doing. Some people I know doing crypto, NFTs, games are a little bit different, but it's all about the same stuff.
So what we're probably going to do next episode, we're probably going to have to just open, because we keep explaining things and we showing them basic stuff. We're probably going to have to just walk through how to even create, or even how you say look at a small contract to see how it's even.
Oh no, yeah, we can definitely, we can do a cool, we can set it up next time. Yeah,
we can definitely do that because a lot of people be asking for they want to see us
do it. Okay.
They understand they need to know the basics beforehand, but they won't see it. That's how.
Yeah, we can do that. Yeah, so we can bring a project that's getting audited. We can talk about it as we go through it. Yeah, you know what? We can definitely do that for sure.
All right, for sure. Yeah, most definitely. That's a good question. I see we almost on time. I got one more question. What do you think about recently found out that Bitcoin is about to reach the limit of Bitcoins that it can make? I think it's at 19 million tokens now. I think the max tokens they can make is 21 million, if I'm not mistaken.
Yeah, but it's okay, so people are worried about this Bitcoin. So I bought my first mini Bitcoin miner 2 weeks ago because I also was like, oh yeah, the scarcity is running out, blah blah blah. And I'm just like, wait, did anybody do the math on how much time it's going to take for the Bitcoin to run out though?
Nah, what's the math? What's the math?
That's what I was actually wondering because I was I'm gonna find out right now really fast. Let me see if I can.
Because they made it seem like it's approaching 19 million, and then
I was like, you guys are making it seem like this is gonna happen soon, and I'm pretty sure. Yeah, 20 million supply limit. Yeah, that's what I thought. Yeah, it wouldn't be until 2140. That's why I was very confused on these news that people are talking about.
So because when I read the article, they made it seem like it was gonna happen.
Yeah, I think people are just doing bad fun out there on this whole Bitcoin thing, man. I think I saw that going around a little bit last week too. I was like, what are you guys talking about? You can still buy Bitcoin mines. People are not investing hundreds of thousands of dollars in these Bitcoin finds for no reason for it to be not profitable by next year. What are you? I was very confused.
Because when I read the article, I said, "Oh, for real?" I said, "Everybody."
No, what's really going to happen is, and I know I can't show it. Again, we're going to be able to do this, guys. We're going to get our hardware out here, so I can guys show you. We're going to get the Bitcoin software up there. We can show you how to get to the pools, how the money comes in, the wallets. Like we're going to show you all full transparency. So once the thing gets in here, we get it set up. Don't worry, y'all. We'll see it firsthand. But just to show what people really should be talking about. So Bitcoin, just to be very basic, right? If there's 100 people mining Bitcoin and the difficulty level is at level 100, right? Your earning rate is at 50% currently. Now, all of a sudden, there's 1,000 people mining. Difficulty rate went up to now a difficulty rate of 1,000. You're going to lose 100%. So now you're down to 10. So all it really just happened is a lot of people are just jumping into Bitcoin mining. Yeah, it might be a little less profitable, but it's only less profitable because there's more people mining. The more people mining means the algorithm hash has to be more difficult. That's all it is. So yeah, it might be a little more difficult, it might take more time, but then it really comes down to another level of if you have the money to buy the most up-to-date hash rate ASIC Bitcoin miners, it doesn't even matter to you because you have the new ASIC motherboards and chipsets. So you're always going to be on top, making the most ahead of all the new algorithm changes.
Right. So when you're mining Bitcoin, when you're mining cryptocurrency,
in general,
you get to keep what you mine, and
it's really about your hash rate. It's all about your hash rate. It's about how quickly you can solve the complex equation.
Okay.
Yeah, the higher hash rate, the better. But again, the more people mining, the difficulty is going to go up, which means less completions, which means less money given out daily. And of course, the more people that are mining, which means you have to get more rewards to more people, so more people in the pool, which means less money to everybody in the pool. And again, I understand that short-term thinking, but I'm thinking long-term thinking. Scarcity at the end of the day is true. Bitcoin will run out. So the way I see it is, I don't care if I'm 30 and it takes me 5 years to mine one Bitcoin. You mean to tell me in 5 years, one Bitcoin won't be worth more than $100,000? Stop.
Right.
It hit like almost 80, 90 in like last year. So you mean to tell me it won't hit 100,000 the next 5 years after everything? Yeah, I'm cool. Unless the world ends.
So, all right, this is my last question. Then we're going to stop it here because we about to get into a whole full-blown episode. So, what do you think, since Winston touched about the country coming up with this central banking digital tokens, do you think it will have an impact on coins like Bitcoin and Ethereum and XRP like that?
I think it's going to impact more the tethers. I think people are going to be having this. I think there's going to be a weird shift from those tethers to a digital national currency bank.
Okay.
I said that right. Because I do think that shift's going to have to happen. The tethers, even with the tether trying to get audited, they failed to audit.
What can you tell about what Tether is? People might not know.
It's just a wonder. Keep it real simple. USDT is a company. They're literally on an offshore company, bro. But anyway, they literally just print money. It's supposed to be a 1-to-1 to $1. It's supposed to equate. I think how much Tether's out. I don't even know how much. Just imagine it's like 3 billion. It's supposed to have 3 billion Tether out there, which means they have $3 billion in the bank. It's supposed to be 1-to-1. You can print as many as you want. It's really just used for a bridge to make sure that you always get your money back out of crypto, honestly. But it's backed by a private company, not a government agency. And they don't really have any oversight or regulation. Technically, it's new business. So people talk about these guys have literally gotten into the Tether business, the business to print money by making these tethered coins, and making these stable coins. The stable coin business in general, I don't think it's going to last. I don't think governments are going to allow it. I don't know how. Honestly, I don't know how they're still around. They got audited. They failed to audit. They've proven that they don't have the money. They have it in it's like 80% of it's in like gold, some of it's in cash, and some other holdings. Like there's actually the audit's out there. You can read it. Like, I don't understand. I don't. The only reason I think Tether's still around and the reason stablecoins are around is because without stablecoins, the crypto market would fall. Because right now, that's the only way people can really move from their main fiat to digital and back is because you use Tether bridges and the stablecoins as bridges. But with the upcoming national banks and international banks making their own digital currencies, those will be regulated. Those will be controlled. And yeah, you won't just be able to print that, and they'll be audited. So yeah, it'll be a painful shift.
Right, I got you.
But I do think it's going to come. It's just like when Ethereum did its first fork from Classic to what it is now, and it's going to do another one, and hopefully December. And honestly, yeah, man. Yeah, it's just going to be some pain. There's going to be some pain because even Bitcoin right now, because of its environmental impact, is technically proof of work, which is the miners, and they're honestly talking about going over to proof of stake. And proof of stake doesn't help the miners. That hurts the miners. You know what I mean? That's staking versus you making money. That's people who already have Bitcoin. Now people hold it and need to stake it to prove the Bitcoin's legitimacy. And that's a whole nother, again, I think it's probably going to shift to that long term because overall we need to make technology more sustainable and it needs to be more accessible. So yeah, I do think the whole making a lot of money, if we're making hardware and mining, probably will come to an end to an extent. But
yeah. We just want to deal with it. All right, we're gonna leave it right there because we want to keep this episode short. So our next one gonna be long and lengthy. We're gonna do actual examples, how you can do look at a smart contract, maybe even look at some type of coins, how you can buy and sell coins. I might demonstrate that how you can do it on some type of platforms like Coinbase or Uphold or something like that. So make sure you all follow, subscribe, listen to us. We on YouTube, we're on Facebook, we on Instagram. You can check us out. I have all in the notes as well. You got any last words you want to say to the people?
Shoot, man, just thank you again for having me out here. Thank you everybody for stopping by and watching. And also, if y'all have any requests, drop it in the comments or just let us know so we can get the content you guys want to see out there.
Right, exactly. Make sure y'all do that. Make sure you comment and share. Make sure you tell us what you like, what you didn't like, what you want to see in the future. Because we're trying to expand this. That's why Mr. Mosier came on, had a great presence, and that's why we just added them into the mix as well. So it's going to be a great show. It's developing into great content for you all to know more about crypto, blockchain, and NFT. So make sure you subscribe, follow, and share this. Tune in next time. At the moment, we out. Make sure you invest safely. Make sure you listen to Mr. Marcus' 5 things you need to do to research before you invest in any type of crypto technology, crypto coin. Other than that, we out. Thank you for watching. Peace.